Hi everybody, this is Murugan from EQUSIS, a SEBI registered research analyst. We are happy to present you another interesting trading opportunity. This time it is through a weekly strategy, that too on NIFTY index. So we are talking about 26th March 2020 expiry. So we have solid 7 days to go, and there is high probability chance to make a close to 3,000 rupees as a returns. So the current scenario says that the Nifty is down by 30%. That too, it all happened in a matter of 30 days. So currently the Nifty trades around 8,200 mark. I'm talking about a 19th 1:30 p.m. So let me quickly take you through the trading opportunities and what probable scenarios we are looking at it. So I think the Nifty witnessed a good move for about last 1.5 years, but last 1 month is a big crash. So what can probably happen? A Nifty can probably recover because now there are a lot of uncertainties expected. So even from 8,000 level, there is a good expiry, a good recovery is expected. So we don't know till what level it can go for it. So we can't be so sure about writing call options, but we did something in a way that even if a market goes up, there is a chance to make close to 3,000 rupees. And by any chance, if a Nifty goes up and then if it witness any sort of corrections in a matter of 7 days, we are looking for a profit which can be even more than 3,000 rupees. By any chance, if there is a kind of downside correction and then if it recovers crazily, then there is a chance that we can make even more than 3,000 rupees profit. And look at this interesting, if a Nifty goes up and then if it goes down because of any volatility, there is a chance that you can actually make even a close to 30,000 rupees as a returns. Murugan, how come it is all possible? I can highlight you the trading opportunity, just be firm with us. But where is the catch, Murugan? At what point of time we lose money? Yes, there is a risk provided if a Nifty falls significantly. That too, it has to fall close to another 25 to 30% in a matter of 7 days from the current level. Only then there is a risk of 30,000 rupees, but still this risk can be manageable using a stop loss. So if you are firm, just watch this video completely and make sure that you express your comments in the below comment section. And those who don't understand options, better it is good to learn through this, but don't execute without understanding a risk management. So this comes with certain requirements. So if you really want to trade this particular one, you need a capital of 2.5 lakh rupees. So we don't recommend you people to take exposure from broker. And the returns possibility, as I said, there is 3,000 to 35,000 rupees as a return one can make out of this. Yes, there is a risk because there is one naked positions we're gonna use, which will make sure that you're gonna have a risk below 6,400. For that, then market has to go down by 25% from the current level in a matter of 7 days. I think 2 circuit. So we'll see how realistic it is possible to make money. As I said, it is a 3-leg strategy. People are hesitant to form a multi-leg strategies because it requires a capital. But remember one thing, we are always concerned about returns for the risk taken. We are not concerned about returns for the capital. Of course, we have to mind the capital provided we make a sensible return on investment. But what really matters is returns for the risk taken. So look at the trading opportunity. We are forming about 3-leg strategies. So using this particular one, we are buying 7,450 put and we are selling 6,950 put into 2 quantities. So what happens? Anything below 7,450 we start making money. Only we make till 6,950, below which, since we have written 2 options, we start losing money. But the spread of 500 rupees what we make in buying a put option of 7,450, that 500 rupees will give you a cushion even below 6,950, 500. So to do this, we are getting a premium of 3,000 rupees because the lot size of 75 into 40 we are talking about it. Okay, now we need to know whether these prices are realistic or not. So for that, let me take a terminal now. Look at this particular one, 6,950 put options. If I really want to sell it, I hope you guys can see the numbers. Now if I really want to sell it, now I can easily sell it for the rate of 133. So 133 I can sell it for. And by the way, if I want to buy this particular one, 230 I can actually buy. I hope you guys can easily see this particular number now. I know I'm talking about 230 you can buy, and you can actually sell it for 130. So it means what? You end up paying 230, but you are you end up getting 260 in your hand. Close to 30 to 40 rupees is what you get it. So I think the spread keeps changing. In the morning we got a very good spreads, but now the spreads were pretty close. But anyway, by doing this, what you get is close to 40 to 50 rupees spread is what you get it. This is a wonderful attempt one can actually give. So I have just highlighted the price is also quite relevant. But to do this, you need a capital requirement of 2.5 lakh rupees. And where is the risk? If Nifty goes below 6,500, yes, you may start feeling the heat. But for you to maintain 1:1, the Nifty has to go down below 6,000. I mean, the risk component really comes if a Nifty falls 25 to 30% in a matter of 7 days. I'm not telling it is not possible, but it is possible because of such a volatility. But if any chances of recovery then fall, then it gives you good returns. I'll give you a payoff table how it happens. Remember, the Nifty is currently trading around 8,200. So I hope you guys can see my mouse over. So if a Nifty goes all the way up, you still got a premium received remains with you. So I'm not denying that the Nifty can recover, because most of you people are looking for recovery. It is possible, because I'm not telling the market is bearish alone. Although market is bearish, that the volatility still scopes that the price to go up. So by any chance this month expiry, I mean another 7 days, if it goes up, we still take 3,000 rupees. So for your capital, you are still getting a close to 1%, probably in a matter of 7 days, a reasonable returns for your capital you are getting it. But by any chance, if a Nifty goes down, remember, if a Nifty goes anything below 7,400, then you will start making money with the put option which you bought it, but you will not lose anything on that put option which you sold it. But if it happens quickly, yes, you will have a negative MTM. For that you need a capital. That's why we are looking for a capital of up to 2.5 lakhs, about 40,000 rupees more than the margin cushion we are looking for it from you people. So currently Nifty margin required is 1.2 lakh for every leg. So we have a 2 margin, so I think 4 plus some cushion is needed on the downside. But remember, you will have a risk only if a Nifty goes below 6,340. So it is a credit put spread. On the downside, slowly if a market goes, a good money to make on the upside. So I hope professional option strategists will certainly find this as an opportunity to trade. But if you are very new to option strategies, good to learn. Keep learning a lot of things. But if you really wanted to subscribe our trading recommendations, there is certain conditions you have to meet. So better what you people can actually do is visit our website. What you can do is visit our website, which is EQSIS.com. And then you have trading tips with option trading tips. Remember, again, there is a better way to trade with futures and options. So don't be blind of writing options, and don't lose all your capital by buying a lot of premiums and getting out of the money. But a volatile scenario like now will give you a lot of money as the markets are exotic. But if you're not minding returns for the risk taken, it will anyway take your money back. So be clear about your risk management. So to subscribe any of our research recommendations, there is a strict capital requirement. So make sure that you read the service, the product before you even subscribe it. Thanks for watching this video all the way. I hope if you have any clarity or any suggestions needed, do write your things in the below comment section.